The last couple of months have been really fascinating from an inflation perspective. At one stage, it felt as though we were going nowhere positive, at least quickly. And suddenly, it seems that we've very much turned a corner. The place where we were seeing the most progress was the US, but it seems that that's taken a huge leap forward last week. The euro area, around 6 weeks ago, posted some really encouraging headline and core inflation numbers. And yet, at the time, the UK continued to post higher core inflation, record high core inflation, and very marginal declines in headline inflation. Now, the combination of those factors meant that interest rate expectations here in the UK were consistently being revised higher. But it seems that the UK may have finally turned a corner. The inflation data we saw in the UK on Wednesday highlighted just that. Not just did we see declines in both the headline and the core rate of inflation last month, we actually saw expectation beating declines in headline and core inflation. As you can see here, headline inflation fell to 7.9% in June. That was from 8.7%, but the expectation was for 8.2%. That may only sound like a small beat, but when we're so used to disappointment with this data, that felt like a huge leap forward. And in the core level, it was expected to remain at 7.1, having risen quite considerably over the course of the last couple of months. And instead, we saw a decline to 6.9%. What makes this data all the more interesting is that we are now reaching a point when favorable base effects are going to start to have a much bigger impact on the headline rate of inflation. So, for example, we could see headline inflation fall by almost an entire percentage point over the course of July, just based on the change that we see in the energy tariffs going around the country. So that could be a significant drop just based on that one factor. But there's other factors that are going to drag down headline inflation over the coming months as well. Things like more disinflation in food prices, lower energy prices in terms of fuel as well. And there's other areas as well where we are starting to see signs of disinflation occur. In fact, the most encouraging thing, arguably, about this inflation report was how widespread it was, and even to a lesser extent, but still to some extent, included services as well. So if we continue to see those inflation figures falling over the remainder of the year, that should also have knock-on effects for wage growth as well, which will ultimately then have further effects on inflation going into 2024. And it's this encouraging data which led to such big moves in UK markets yesterday. We saw the pound falling heavily, UK yields being pared back, and also an uptick in the FTSE 100 because of that inverse relationship with the currency. But also it had a big impact on interest rate expectations. As you can see here, interest rate expectations for the UK have now been pared back quite significantly. Markets pricing in maybe 3 more rate hikes before we reach the terminal rate. Now that could change further if we see more favourable inflation numbers going forward. But when you consider that we saw the peak at around 6.5%, and some were even suggesting it could go higher than that, and we're talking just a matter of weeks ago, this is a huge step in the right direction and suggests that we are seeing quite significant progress being made on the inflation front finally, although there's still a long way to go. And to the extent that we think that there's going to be much more to come, which is why markets have performed such a dramatic U-turn. It helps that this has been backed up by big progress on inflation outside of the UK, not just here in the UK as well. In terms of what impact this has had on the currency, you can see here against the US dollar, we've seen a significant decline in the pound over the course of the last 24 hours. Now, what's interesting here is we actually saw it break above 130 last week. That followed the US inflation data. We saw it break above 130 for the first time since April of last year. And it seemed to be a big psychological breakout here, and potentially a big technical breakout as well. Now, we've seen it pull back below 130 again on the back of this better UK inflation data because of how unexpected it was. The question for traders now is what we've seen over the last 4 or 5 days a corrective move as part of that broader bullish pattern, which the break of 130 encompassed, or is it such a significant shift here in the UK on the inflation front that it's actually going to see the pound going to reverse, because the pound has strengthened quite considerably against a multitude of currencies, not just the US dollar. And that's why I've added these key levels on the chart here, because I think this could potentially give us some big signals on where the pound currency is heading and where the pound dollar currency pair is potentially going to head next. Now, what I've highlighted here is the rising trend line that actually goes back all the way to September of 2022 and has a 2 or 3 touching points there. We've also got the fib levels. Now, that takes the June lows going into the July highs, and the 50 and 61.8 fib there fall around 128 and 128.66. Now, that zone also encompasses those recent highs from mid June as well. So you can start to see an area around there, around that 128 to 128.50, where we've got the combination of all of those potential support zones. If we see a break of that rising trend line, that also means we'll see a break of those fib levels. It also means we'll see a break of that previous high as well, and could potentially therefore signify a trend shift or at least a broader correction in the pound. Below there, looking at 126 area, you can see that that's of course that June, late June low, but it also then coincides with the 55.89-day simple moving average band, which again you can see the price was very responsive to back in May when we did see a bit of a corrective move there as well. So there's a few areas there which I think are going to be crucial potentially in determining or at least signaling where this currency pair could potentially be headed next. If we see a rotation higher, as we've already started to see off that 50 fib or the 61.8 fib, that could be a signal that despite the developments that we've seen here in the UK, the pound still remains bullish against the US dollar because we're seeing similar developments on the inflation front there, and it could still be viewed that the pound still has more ground to make up. That could potentially be a bullish factor in this currency pair, but a break of that rising trend line could potentially be a very bearish development, and one that I will personally be keeping a very close eye on.